And lastly, and this one, in addition to all the things that we just talked about, is definitely going to have like a radical change in terms of how we prepare for like the possibility of student loan forgiveness. And that has to do with the fact that this bill does not extend the freeze as basically not treating forgiven federal student loans as taxable income in the year of forgiveness. What do I mean by that? Prior to the Tax Cut and Jobs Act, let's say that you made $100,000 and in the year that your student loans were forgiven, you had $200,000 worth of student loans forgiven. Well, when you filed your taxes for that year, it would make it look like you earned $300,000 of taxable income, which was a huge deal because the $100,000 that you actually earned, you likely had your employer withhold some taxes or you put some money aside to cover them on that portion of your income. Whereas the $200,000 worth of student loans that were forgiven that are now treated as income, you didn't have anybody put money aside from that. So if that led to a $40,000 or $50,000 tax bill, you were sitting there with a $40,000 or $50,000 tax bill trying to figure out how to pay it. Now, as a part of the Tax Cuts and Jobs Act, they put a freeze on that. And at least at the federal level, until the end of, I should say, until the start of 2026, if you had your loans forgiven under the income driven repayment plan, you would not have to worry about taxes on that income at the federal level. Now, there are some states who would still tax it as income at the state level, but at least at the federal level, there was some reprieve. So it took away the responsibility, at least during this period of time, of what we had to do in the past, where it's like, hey, you can't just have your student loans forgiven and not think about the impact. You have to simultaneously project how much is forgiven and put aside money to cover a potential tax bill. Well, since they have not extended that freeze, we're now back in that mode where you can't just look and say, "Ooh, congrats, I'm gonna pat myself on the back or give myself a hug because I'm getting 100 or 200 or $300,000 worth of student loans forgiven." We're now having to say, if it's forgiven under public service loan forgiveness, you're all good. There's no taxation for federal student loans that are forgiven through that program. But if it's forgiven through general income driven repayment plan forgiveness, you need to have done some planning. And the way that you typically do that is through non-qualified, or in other words, non-retirement investments, where you do some projecting of how much you would potentially owe in taxes, and you do the best you can to save up to cover that potential expense in the event that it impacts your taxes down the line.